Good evening, everyone. Thank you for the nice round of introductions, and thank you on behalf of everyone. Thanks for having us here. Okay, so today's topic is the age of analytics and competing in the data-driven world. It's a very, very relevant topic for all of us in our respective areas of work. So in the wake of the pandemic, indeed we have seen business disruption, but it is also true that at the same time, we have made great stride in our adoption of digitization, uses of data and technology. So this has indeed transformed the way we build products, the way we select, the way we take them to the customer, and the enabling infrastructure and machinery, which really helps us in fulfilling these financial products to the customers. Today, at the same time, there are emerging threats and challenges to this. There are the considerations of mitigating fraud, which are manifesting in unique ways in this exciting time. These are some of the things which are on the top of our minds. And today we have a panel of seasoned industry veterans, and we have the opportunity to hear from them about what they're thinking in this exciting phase of the industry and what they're planning for their respective businesses. So I'm really looking forward to the next 60 minutes to get the unique perspectives, and I hope all of you enjoy the next 60 minutes as well. So with no further ado, we'll start the discussion. I'll move to Kunal. Kunal is CRO of a very large business. I would like to ask you, what are the key areas where you use data to grow your business? And when you look to the future, what do you think are the biggest impact areas that you are planning for your business?
Thank you so much. Firstly, the views that I'll share over here are my personal views and not the views of my company. Secondly, thank you Contact India for having me over here. I basically, run the risk business for the company, which has about 80% of the customers which are new to credit. The data footprint of these customers are not as high as you see in the urban market. They are typically customers who are from the lower strata of income. So to get data for them is a challenge. So what we do is primarily to start with, I would like to basically divide this particular question in two parts. The first part is what we do with the present data. So whatever data we have of the customers, whether it is the demographic data, the data that the customer already has bases the history with us, which is the payment history and the collection history. So we kind of create models where we see what are the learnings from these customers from his payment history, give those learnings back to the sales team that, okay, this type of a customer with this model at this pin code or this particular locality, is having a higher probability of default. So you might want to basically have a risk-based pricing for that kind of a customer segment. At the same time, when we do collection strategy planning, we also see the past track records of those customers. What are the kind of payment patterns of this customer, whether he's a cash payment customer predominantly, or he's paying through the eNash, or is there any other challenge? For example, if there's a customer who regularly pays, who's regularly not paying, but he continues to pay on the third week of every month, we kind of understand from that customer what is wrong. Because at the end of the day, he is proving a will to pay, but he is not able to pay in time. So then we can kind of understand that the payments that he gets from his principal are timed in the third week of the month. So therefore, we change the EMI cycle from, let's say, the first week of the month towards the third week of the month. And that's how we kind of use the data presently in our organization, and we use the present data. The future that I believe would be there, and I'm talking about short-term to mid-term future, will be more of doing predictive analytics, where before you basically take the customer on board, you kind of predict and see what kind of probability of default will be there for this customer. And mind you, like I said in the beginning, this is a customer base which is not good on data footprint. So we are kind of building those models with a high level of confidence level, so that our prediction to default is better. As far as the collection is concerned, we want to basically again do a more behavioral connection analysis model, where again we can predict what kind of collection strategy we would want to put in that customer, so that our costs can be managed in an efficient manner. So this is how, the current model, and then going forward in the future would be the predictive modeling strategy that we tend to use.
Oh, thank you, Kunal. Great to hear your focus on, we learned your focus on predictive modeling. It's very interesting to also note that how you're looking at the customer with empathy and using data to also manage his repayments. Thanks for that. We move to Phanindra. Phanindra, we would love to hear about your perspective on the same topic. May I request you to also share a bit about what have you learned from COVID, and what are the trends that you see from your perspective, and then how do you look into the future?
Sure. I'll try to kind of rephrase a part of what Kunal said. For example, what he's talking about is a segmented approach to treating customers. Like, you start with a thick file customer. I mean, essentially we're trying to assess the credit risk of an applicant. Somebody who comes with good enough data on credit repayment, we can thoroughly bank on bureau to give us a very good assessment and make a sound judgment.
Yeah.
But when that file becomes thin or non-existent, we tend to fall back on other attributes. For both Kunal and me, a large portion of our customer franchise, the asset that is being financed is a revenue earning asset. So enough information about what our past transactions have been, or what kind of business they operate in, what kind of locations they operate in. They are obviously influenced by a lot of geo and political factors, but to the best possible, I mean, we can't predict something like a COVID, obviously. I mean, it's a black swan event. I mean, it happens once in a lifetime. Hopefully, okay, not more than that. So we tend to fall back on other attributes, like what is the income of the person, what is the profile, what kind of, any of the asset holding attributes do they have, or what kind of an asset is being financed. So we try to take into account these kind of informations to kind of come to an assessment saying, again a segmented approach, thick file, thin file, and then probably no bureau. Alternate, cross-tabulated with alternate dimensions to, kind of say that this is a high risk and a low risk person. As we went through COVID, I mean, essentially all of this will translate into some kind of a B, C, D, E kind of a classification, saying that, A being the least risky, B, a little higher, B being moderate risk, maybe D, maybe high risk, and E might be, a kind of risk that might not be profitable for the company. So we might walk away from E as a business opportunity, but focus on A, B, C, D. What we've seen happen in the time of COVID, and I'm sure this impression is reasonably well appreciated across all of you, is that in general, the ordinality of A, B, C, D has stayed there. That A continued to be less risky than B, B less risky than C, C less risky than D. But pre-COVID, E we would have walked away. During COVID, we might walk away from D as well. So the pool that we might want to lend to has shrunk in that sense from a true profit orientation. We've also taken a lot of steps to see, how is it that we can make the period of COVID a little less stressful to the customers. Like, if customers were servicing both principal and EMI, can we move them to maybe servicing only the interest rather than the full EMI? So that way, for a period that we were in lockdown, we kind of do, either a moratorium or do the basic minimum that is required to, kind of keep the book current, and once the unlock has happened, let them go back to the normal. So these are few thoughts that I wanted to share here.
Sure. Thank you. Thank you, Phanindra. I think one thing which I took away when I was hearing you speak is, of course, data is used to segregate customers by risk. We cannot predict a black swan event, but we observed that in the black swan event, the people who we knew were at first, they deteriorated faster. I think that's a very important insight, and I think in the days to come, it gives us an interesting indication as to how to plan for a future stress event. I think that's really very insightful. Thank you. We will now go to a little different topic. We have been upbeat and bullish about the use of data, but let's come to a little different kind of question, the element of how to manage fraud. Fraud, of course, is one word, but there are many manifestations, and it has a different meaning to every context and situation. I will now go to Harshit. And Harshit, I would request you to share your thoughts on how to manage fraud while we are so bullish and upbeat about the advent of data.
Yeah, thanks for this question. It's a very pertinent question because, as you know, the frauds are increasing many folds. Any day you open the newspaper, you'll see a sort of fraudulent, be it payment transactions, be it consumer lending. As per an estimates, close to 1.15% of the NPAs in consumer lending is because of fraudulent transactions. So on such a large base, you can imagine the magnitude of that number. So it's of course as big a topic as credit risk. Yeah, so fraud detection is an emerging field. There is a lot of data being used for fraud detection. How people have started using it is basically trying to find anomalies in the data. So be it the application data, or be it the payments data, or be it any alternate data which is used for credit underwriting. So trying to say by using simple clustering algorithms or some more deep learning algorithms, you try to see the network of the fraudulent accounts. Many a times you'll find the accounts which are fraudulent, there's a lot more networks in terms of more payments to some more accounts, or even in the KYC IDs with image AI or something, you can see many duplicates or many such networks which are very, very different from a regular account. So that, of course, is one way to deal with the anomalies in the application data or something. And of course, like my field is, I look after both ERM and the analytics. So a lot of till date, the enterprise risk management function has been looked as, more of a traditional and, risk identification, mitigation and all, where the use of quantitative quants or analytics is not that much. So I think we need to increase the use of quants and some of these algorithms, not just in credit lending decisions, but also in these operational risk or fraud related aspect as well, where we can use such algorithms to find, to distinguish between a fraudulent applicant and a regular applicant. Yeah. Thank you.
Thank you, Harshit. Again, very insightful. And one thing I hear you say is the applications for banking services through digital means is going to increase very rapidly, which will increase the percentage of fraud, and one should invest in setting up that machinery.
Yes, that's true. So we need to have a probability of fraud as well as, in addition to the probability of default, maybe.
Okay. No, thank you for that. We will move to now Manoj. And Manoj, with you we have an expert on the tech side in our midst. What everybody wants to know is, as we talk about advanced techniques and methods, what is the best way of going about building this infrastructure? And many organizations in the financial services space today, they are trying to build. It is not necessary that they already have it running for the last 10 years. So what are your thoughts on what is the best way to do that?
Thanks, brother. So from a technology standpoint, right, see, I think there's a little of doubt on data-driven decisions, modeling. We all have been talking about that. But then, at the end, the decisions that you take from this data is only as good as the data, right? There's no magic element involved in that. You use data to take some decisions, your decisions are going to be as good as the data which you used to build the model to take the decision. Connecting this to what Subrata asked, the infrastructure. So then it boils down to, how do I bring all of these data together? Remember, that's not my core business. I really cannot burn the midnight oil engineering this. But then that is in the critical path. I need to have a way to seamlessly bring, consolidate, ingest, assimilate the data, all the data that I believe influences my business, my customers, so that I can use that to take the right decision. Thanks to technology, all of us are involved in that part of it. Technology has grown a lot, and I read somewhere the compute power in the smartphones that we use today, please compare that with the one that was used in the Apollo 1 mission. It's much better. So that's how technology has gone. So most of the, say, CSPs, we say, cloud service providers or platform providers, to an extent, they have solved the problem of this infrastructure, and they continue to do that. And open source is another great example. There's a lot of pipelines built, there's a lot of platforms built, which as long as we have standard data, it's a matter of connectors connect. And it's not just the structured data which is sitting within the four walls of our organization. It is about how your customer is behaving. It's about those humongous number of satellites out there, ISRO, we keep reading about that in the newspaper. It's available. Many data is available for us free. The environment, the soil condition, the moisture, the climate, the prediction on cyclones, rain, all of those. Take a simple photograph for a field or for anything. It's geotagged with a lot of information. Every transaction that happens today, it happens somewhere and sometime, meaning place and time. We need not break our heads how to bring all of these or log all of these together. There's something called spatial databases. It's all given. So using the right platforms, which thankfully is available out of the box, there is open source, there is commercial providers, use that and uplift the way you are collecting your own data and help yourself understand yourself using your own data. Things are much easier. So getting that right, that ecosystem, that infra right is crucial, and thankfully there are many ways to do that today.
No, thank you, Manoj. I think fantastic points. I think, as you very rightly said, so much data around. And you're saying we should really focus on getting that assimilation of data right, because everything is as good as the data.
That's right.
I think that's fantastic. And I can fully relate. But thank you.
Thanks.
We'll come back to you, Manoj. But on this note, we have been talking about how data is everywhere, but let's talk about a subject where data is scarce. This is the subject of slightly underbanked to very largely underbanked, and a segment that is called new to credit. So we talk of credit penetration, but there's a large segment in our country which is not recipient of credit. How can we use data to serve that segment better? And for this, I will go to Nirav. Nirav, I appreciated the answer. That is a very peculiar question. On one side, we are saying there's no data, and then we are asking how to use data. It's very funny. But then we will, but who better to ask than you, because you are in the SME space, very close to my heart as well. SME is 1/3 of country's GDP, but largely out of the formal credit fold. We'd really love to hear your thoughts on how, in the age of data, we can do something about new to credit.
Sure. I think this unbanked work has become very famous, right? So it's a large cohort, can't be addressed at one go. So at a very high level, let me just break this unbanked into various segments, right? So there is a segment which is unbanked for its credit needs, but bank for its saving needs, investment needs, right? So this is the first segment, which is the most easyable, targetable through data.
Yep.
Then you have a second segment, which is a basic banking needs are met, not very small, but then they are part of formal economy, filing their ITRs, GSTs, something of that sort. There's a lot of MSMEs and those. Then there is a third segment, which is not bankable for even savings, investments, protection, whatever. They have some digital footprints in terms of phone, being part of e-commerce or something around that. And the last segment, if you say, which is neither a bank nor having digital footprint, I think that will just keep out of scope, but there is a way I think these guys already bank on that base. If you consider these three segments, and then you take what Funny mentioned on the credit side, when we lend, we just have to answer two questions, right? Willingness to pay and ability to pay. So the first two segments, I think a lot of us have already cracked, and a lot of a banking-based model to address the needs, which caters to the first segments easily. The second one with ITRs and the GSTs, which making data more and more democratic, that can be addressed with the ability to pay. willingness to pay becomes slightly difficult for this NTC segment, and that's where the catch lies. Like, there are two school of thoughts working. One on the behavioral side, they are working towards more on the psychometric test. I have seen people working on even small games which make you play and see how are you willing to pay. It's your basic attribute, right, of discipline. And then there's a second data side. Now that's where it becomes is basis user consent based. You can take a lot of data of how well I pay my other bills, say electricity bills, my mobile bills. Tells me about my discipline about that. It can also extend to my affluence levels. Now that can be used for ability and for willingness, both for the third segment, that what sort of phones I use, what sort of expenses which I do. And then again the regularity on the, say, EPFOs on the SME side, like if you have how they is registered and paying their salaries on time. So I think all this together gives you willingness and the ability to judge around. Now, where we stand at this stage today is you don't have enough data. I think a lot of experiments are happening on the retail lending. SME lending is somewhere I think people are trying on the side, because a human being can have two different aspects when he makes a retail loan and a business loan. But as we progress, and I think next 2-3 years onwards, with account aggregator becoming more, and you have a democratization of data, I think all of these models will coming, and we will see this large unbanked segment becoming more and more bankable. And similarly, I think other industries like insurance, investments, all are working on the same. So the data footprints will be available. The data will democratize, and I think then this becomes a lesser a problem. So I think that is the way to look at it from here till next 3 to 4 years. That's how I think.
Thank you. I think we heard you loud. I think you said account aggregator and the whole OCAN framework. And in general, there are many alternate data points, even when the traditional data point is not there. I think fantastic point. We look forward to that stage getting unlocked in the near future. Thank you, Nirav. We now move to Parag. In fact, to Parag and Suyog, I plan to ask one question, and that's about how to build this data stack. The importance of the data stack highlighted earlier by Manoj, but building this is work in itself in our respective business. And finding the right people to do it is also something to solve for. Doing it in-house, doing it outsourced, there are pros and cons. So what is the right balance? And we would really love to hear both of your thoughts on that. Parag, if you can go first.
Sure. Thanks. So I think as the theme from here is, we have some amount of data, we don't have some amount of data. As Nirav rightly called out, there are alternate methods in which you can get the data. So I think, if you look at last 5-6 years, there is an explosion of data that has happened. Primarily, people who have been working in the data in 2010-12 would realize that there was a certain amount of structured data that was coming. Post the geo effect, as we call it. So today, most of us, when we go out, even if we forget our wallet, phone is something that we carry, right? So we use phone for doing payment, we use phone for, accessing social media, we use phone for messaging, we use phone for multiple locations. Now, what it does for, people like us, right? For people like who are doing analytics on it. So is a structured data which you get it from banks, which you get it from credit bureau, which you get it from, other means. Also, there's a lot of unstructured data which keeps coming. So whether it's your SMS, SDK that, some of the organization leads, your location, your appography data, the kind of apps that you use, the kind of contact information. So interestingly, the apps that are there in a phone can tell a lot about customers. So, we had observed that people who are downloading Signal, when there was a issue, if a lot of you remember that WhatsApp said that we'll charge you money. And a lot of people downloaded Signal. Now, what does it signify? It says that, these are the people who are tech savvy. we found out that, a lot of people are using Bitcoins or, investing in those kind of things. That tells the risk that people are risk taking. So lot of this kind of information is available. And as you rightly said, now more important thing is how do we structure this data? And I think that's where, people like Manoj and other people, because now you have multiple options. You can, you go and use clouds, the integration, the APIization has become much more easy. You can directly create your, models, run it on cloud, integrate it directly with the system. That gives you an accessibility to your frontline directly through the various apps. So I think we are in a stage where as we grow, as we identify more and more use cases, the usage of data will become more and more important. So I think this is where the important question comes, is whether you build it in-house, whether you do it, you outsource it. Now this again depends upon the maturity of an organization, the kind of use cases that you have, the kind of integration that you have. So if your cloud systems are mostly cloud facing, they are on the cloud, it makes much more sense where you can integrate it over there. If you have all of your systems, or probably most of your systems on-prem, then it requires a different set of skill set, which probably you will have much more in-house. If you are using something like a new buzzword is, right, ChatGPT. If you're using something which are use cases over here, obviously it makes much more sense to go with an expert who can give you much more value for your buck that you're spending than probably getting, people, training them and all. So I think we are in that stage where probably, this is a question that probably all the data heads, risk heads have to keep asking. And I think there is, this again depends upon use case to use case. But one thing is definitely sure, data is going to increase, and the usability of data and the decision making through data is something which will definitely increase as you go ahead.
Sure. Thank you, Parag. CEO, we want to hear your thoughts on this. How would you build
I
this?
completely agree with what Parag's saying, that especially in our field, I mean, I work for Sherkan, he works for Kotak Securities. In broking, the use of data is extensive in terms of understanding the client personas, the customer segments, because the needs of clients could be different, right? So there would be some people who would be interested purely in cash and carry, right? They are dealing only in equities. There will be some people who will be interested probably in slightly high-end products like derivatives, futures and options. There will be some purely mutual fund clients. To understand the client profiles, client segments, that is something that is supported extensively through data. The sources of data are immense, right? So you have the typical application data, the behavioral data today, digital footprint, alternate data has come in, and broadly the number of data attributes for a client that are available to us plays an extensive role, which is as important, if not more, than the typical mathematical model that you use to build a model, right? So availability of those few attributes, in fact, makes your models even more richer. So that makes it extremely important for client experience, even in terms of structuring. So for example, the digital assets that get built, the website, the mobile app, the problem is not exactly about what features should we be adding in. That's definitely one product problem that is required to be solved. The other important problem is what is it that you would want to take off from your website? What is it that you would want to take off from your mobile app, right? So that you make it far more frictionless. It is important to understand what features, what products on your website or app are getting used, what are getting used lesser, what is it that can be replaced, and so the right decision can be taken in terms of client experience and customer journeys. In terms of, I think Parag covered it very nicely in terms of the decisions around the stack. I would also want to look at a different angle, which is about the project life cycle. Typically, Manoj mentioned it, data engineering is the foundation of data science, right? You have the right data engineering, you'll be able to take data science-driven decisions far better. But one of the approaches could be to have the entire ecosystem built in a very nice way, and then you start delivering results. This is slightly a time-consuming approach, wherein the expectations from your stakeholders, the business stakeholders, could be like they need results faster. So adopting a typical agile framework is something that really helps, right? You decide the use cases, you work along the data attributes, the data sources that are required, you complete that particular set of data integrations, you start delivering results which will actually enable you to seek the funding for the other sources, the other kinds of data that you need to integrate. Right? So typical projects life cycle, which is in the format of having a minimal viable MVP, right? Then delivering results, then you move to the next orbit, the next MVP, and taking it forward. That is something that works extremely well. In terms of buy versus build, right? There's no right answer to that, right? Both the approaches, buying and building it in-house, have its own pros and cons. But typically, the approach that is being taken by many organizations today is the components of the solutions are something that are bought, and then you use those components to build larger systems in-house, right? So by following this approach, you also ensure that you're not reinventing the wheel, right? There's someone who's done it better in the market. You try to leverage on what he has done best. At the same time, rather than buying a product from the market and then spending a lot of time on customizing it, right? The customizations are the real pain areas when you actually buy a product and try to implement it in your ecosystem. You buy components and you try to build an in-house product using those components so that parallelly the team also gets trained on that, and your ability to serve the customer-centric of your organization gets better.
Okay, thanks, Parag and Suyog, for your inputs. I think I'm going to come to you, Kunal, on this. You want to add something?
Yeah, I just add one point. What you just said. I think there is no right and wrong answer around whether to buy or build. But the most important aspect as a CRO, when I look at such proposals, is whether the person who's bringing a proposal thinking that the customer has trusted on the company and given you his data. So if you are not having the expertise, there's nothing wrong in going out and looking for an expert partner to support you in terms of going along with the journey. But then the partner should also be mature enough to understand that same level of responsibility lies on him as well. That you are sending now a customer data, which typically will not be a PII information, but non-PII, but still it's a customer information at the end of the day. And they should also be having a similar level of control, which could give you, a sense of responsibility that yes, they are willing to protect your data and take accountability in managing your data, like the way the principal has towards the customer. I think that is one important aspect that I just wanted to add to you, because I completely agree with what the gentleman said. It's just that one CRO point of view that I'm adding. Typically, that's a question that I always ask.
No, definitely. And as a logical extension to that question, as a CRO, I would ask you to just highlight that what are the various risks that you see emerging in the whole advent of data and all the proliferation of data and database methods, because this is the conversation we're having outside. So the question is that what are the key risks really? And to be realistic and our feet firmly to the ground, how would we deal with those?
See, again, from a risk point of view, I would say that, I typically look at InfoSec risk in three parts. First part is risk which is emanating from internal sources, which could be culture related, which could be some, errors that we are doing while, coding. This could be errors relating to developers not having enough maturity, something of that sort. The second risk is which is coming from external sources, right, where we know that, this particular source is, we are getting phishing attacks and such things of those sort. The third aspect is where we get, risks from unknown sources, which we are not prepared for, but we believe we are prepared for, right? And then once we get hit, we try and understand, learn, and then, we rebuild things around it. So, therefore, you have to have a strategy to control all these three kinds of, attacks which are happening, or three kinds of risks which are there. When it comes to internal, it's about coaching the people, telling them, exactly what is the impact of that particular, error that they are doing, or, negligence which has happened, or, how it can affect. Because only once you add the maths to the error, is when the person understands, okay, I am that important to the system, so I better be under control, and then also put in certain maker-checker controls to ensure that these things are authorized properly. When it comes to the external part, with these known things, you kind of put proactive controls where you will do regular VAPT exercises. You want to basically do some external ethical hacking attacks on your own system to understand what are the vulnerabilities and what are the open issues. The other part which is also coming as a free gift with all this data connections, which is API connections, which I am seeing very predominantly coming, is that you're opening yourself to some external ports.
Yeah.
Okay, when you're opening yourself, there are vulnerabilities that you're exposed to. So it's good to have various data points, connections and everything, but at the back of your mind, you have to be very, very clear that these are the external threats around it.
So you're harping on the point of cyber security, I think.
Yeah, and then basically build your information security management system in such a way that you have proactive controls rather than having detective controls.
Sure.
And lastly, like the point that I mentioned earlier, for the unknown sources or the unknown errors, what you can do is basically learn. And I would see that this particular industry, especially the NBFC and the FinTech industry, will soon move into the SOC kind of a framework, which is the Security Operations Center. And you will see that the kind of maturity that an SOC brings into this sector will have lot of proactive risk controls when it comes to information security.
Fine. No, great points. Thank you, Kuhal. So one thing I definitely took away is while you do so many models, the importance of human control on human errors and the control system is paramount. So, thanks for that. And we will talk a little more on similar topic just to bring a little more balance to the conversation. And I'll come to Harshit shortly after. I'm going to come to you, Nirav. So the question is a little similar, but this is a little more pointed question on the topic of using digital and agile methods. How do we keep a balance on risk? So the moment we say digital, it seems everything is quick, at a click, etc. But are we compromising or dropping guard? What are your perspectives?
So yeah, the classical risk management approach of risk identification, then monitoring, mitigation. So that has to be more dynamic in such practices. Basically, rather than when you start a project, list down the identified risks and the controls for the project. Rather than that, there should be a more continuous approach where the system itself throws up some early warning signals. So that the system itself tells you that this is a new potential risk which has come up, and the system itself suggests some controls around it. So that sort of the entire functionality of risk life cycle has to be built into the agile processes rather than having the entire thing in silos at the start of the project, or reviewing the same after the project. That being from a process efficiency and process control perspective. And the next question was on?
Yeah, no, this is about it. So do you really, are we dropping guard or what? How do you make the balance? You said that we need some of the checks and controls can be data driven also.
Yes. So the organizations who do not update such control methods, risk control methods, would of course be at risk because of a lot of new risk emanating in digital space.
No, sure, thanks. If I may ask the same question to you, Nirav, and especially from the perspective of business lending, which is at least perceived to be a lot more traditional than consumer lending.
Yeah. So let me just, I think he has already covered on the part of process. So I think let me just give a twist to the risk piece. So I think we all have given a risk of very negative, generally a connotation of not being business friendly or something, right? It's a different discussion altogether. But I think risk management is nothing but managing uncertainty. And lot of these things does not helps you to manage it better. So give an example, when you said business lending, right? So you do in yesteryears, you would take a physical copy, then you scan it, or you keep a copy and you keep a file around it. It gives you a good sense of risk management, but maybe directly pinging a GST infrastructure and getting an API and directly validating from the source removes the entire fraud element. So it's one of those things which improves customer experience, improves operational efficiency, and also helps risk management. I don't think there is any gap there. When we said about, I had addressed the question of unbanked, right? When you came up with new models, and then you will say with Agile, the model keeps changing and learning, and how do we address that?
Yeah.
But then again, if you are pricing for the risk, then I think it's fair enough to take that, unless your organization doesn't have a strategy to not cater to that segment. So if I decide to cater to an NTC segment, I have taken a certain strategic risk call. I price it as per the model, and if it is following, it's fair enough to implement.
Absolutely.
The only challenge you can have from the risk management wise, what he mentioned was, when you have models, piece which are impacting your statutory or regulatory front around it, your provisioning models, your compliance related stuff, I think that it's fair enough to ask on the risk side to have more stability, to have more understanding on those pieces of it. Rest, I believe risk can be business friendly and can allow you to do all ways which can help you manage the uncertain world. Yeah.
Well, thank you for that. And I personally, on a personal front, I totally agree. And I think we have answers too. I think Kunal has something to add.
Yeah, he's touched a very sentimental line. Risk management can be business friendly or not. So, I always say, preach and practice that, risk management function shall and should always play a critical friend's role and not a speed breaker's role. As long as they are critical friends, where the two words are critical, don't be, biased. And as long as you're friendly means you're supportive to the business with a solution-based approach, you will always be taken as a partner in the journey. Otherwise, you will always be taken as a tick in the box in the journey.
No, I think as you rightly said, both of you, that both sides are important, and both the revenue side and the loss side needs to be optimized together, and then we succeed. But I think definitely one point that keeps on coming is there is an answer to the situation. And once we take that answer, then and we manage the risks by taking cognizance of the risks, then perhaps that is the way forward. I think that's what I would take away from this. And to come to a little more upbeat topic, I go to Phanindra, and I would like to ask you, and we are now in the closing moments, but please take your time to answer this. Best uses of AI ML to make a seamless customer experience. We would like to hear from you. You are managing a really large traditional business, but you are a pro data and tech person. So in your experience, in your view, what are the 2 or 3 best examples?
Sure thing. Yeah. So, if we take a step back and try to understand what lending industry can take from a customer experience, I think first we should look at e-commerce as an industry. If you look at, or even travel as an industry, like if you look at things like Booking.com, Uber, Ola, Amazon, Flipkart, they've just revolutionized customer experience all through tech. And I'm very sure, is there anybody in the room who doesn't use any of these or prefers the offline way of using it? Show of hands. Right? 10 years ago, it was reasonably different from what it is today. Yes or no? Yeah. So this way, there's a lot of learning we can take, because lending as an industry is more cautious about which customer to onboard and whom not to. We say yes to the wrong customer, the business will not sustain. And we say too many no's, there won't be enough business on the plate.
Yeah.
And so far, a lot of innovation has happened on the onboarding journey, where, let's say, from application origination to sanctioning, there's a lot of work that has happened in giving an approval instantaneously or almost instantaneously. Then we have to break down business into 2 kinds, whether it's an unsecured loan or a secured loan. In unsecured, again, there's a good amount of progress that has happened through the use of AI ML, especially using both credit bureau and alternate data. Like, for example, a lot of things like checking whether somebody is salaried, what is somebody's salary, where is somebody is located, and even credit bureau driven information. All of these are API driven. We can pick up the information quickly, give out a decisioning very quickly. So an unsecured journey is probably among the easiest of the lending journeys to do completely digitally seamless, and a lot of data work can go in the background where the customer need not be aware that so much of a data processing is happening. That way the experience becomes a lot more seamless for him. Things starts breaking a little bit, going from a true digital to a phygital kind of an approach when an asset is involved. If it is a home, it obviously involves some kind of evaluation, but still there are opportunities that exist in terms of how this process can be re-engineered. Like there may be certain segments that, if it is a balance transfer kind of an opportunity, re-engineering can happen, steps can be waived, some amount of data-backed decisions can be taken in terms of what steps to curtail, what steps to keep. But new originations will again tend to be a little time-taking in the mortgage industry. But in vehicle financing, new can be a lot easier than doing used because we know the asset is rather standard. Yeah. Evaluation is fairly well determined. So again, it depends on the industry and the particular product we're dealing with. There's a good amount of data we can tap into, whether it is traditional, alternate, and even the modeling techniques we use are both traditional and alternate in terms of, like, I'm sure friends from the FinTech would say that, how somebody uses the mobile phone, whether they read a message or whether how they charge the battery, all of these attributes can get into, kind of profiling the behavior of the customer, which is, I'm still on the skeptical side of things as to how much this will indicate credit behavior, but it's an indicator of behavior. And we've got to find the right segments in which, these parameters can be used to give a better experience.
Sure. Thank you, Fanindra. I would go to Suyog with same question from your view of the broking world. What do you think are the best examples of customer experience?
Absolutely. I mean, many times the clients, so for example, there are a set of revealed preferences and there are a set of latent preferences, right? So data is that marker which actually helps us understand the latent preferences of the client, right? So he may not tell you what part of the mobile app or what part of the website that he likes the most, right? It is something that we, through data and AI, are able to judge basis the paths that he follows on your website or the kind of things that he searches for or the kind of events that get triggered on his mobile phone. So all this information can then be used to actually create a better digital asset. Digital asset is a generic term, be it a website, be it a desktop application, be it a mobile phone app, right? To serve the client better. So better client experience. I just take an example again from the broking world. There may be certain clients who are probably knowing what to buy, right? They're not interested in the content part of the website. Because brokers typically have, okay, our research is saying this is something that's good to buy, this is something that we recommend in this particular asset class. So there may be a client who says that I don't want this right now. I know what to buy. I need to go there, seamlessly complete my transaction, transfer my funds, buy the stocks, and go ahead, right? That's a different kind of person. Whereas a particular journey may be about monitoring his portfolio. He just wants to go there, see at what is the position of his portfolio today. He's not intending to do any transaction. Then we should not be pushing a transaction. The third type of profile could be probably he's wanting to explore, right? He's wanting to search a lot of information in terms of what are the kind of news items that have come from the industry, or is there a corporate action on ABC stock, right? Whether, let's say, the IT sector has moved in a particular way and an ABC company within the IT sector, is there any news on that, right? So search is a different thing. And there may be a person who's probably wanting to consume content or learn on your digital asset, right? So understanding these latent preferences on the basis of the data footprint that he actually has, right? Data footprint actually feeds to these AI ML models and helps us design desirable digital assets, which are far more customer friendly and delights the client, which ultimately creates stickiness and is a win-win situation for both the client as well as the organization.
Sure, thank you, Suyog, and which brings us to the final topic for our conversation, and this is about explainability of AI, a very big area, and we have only a few minutes left. But I go to you, Manoj, and from your vantage point, where you see many industries and you see tech very closely, how do you think this is, so for the financial services industry, in our context, What are your thoughts? How are people approaching this? Can you share a few words of wisdom on this subject?
Sure. Explainability certainly is a very key aspect. And two, let me split that into two parts. What do I need to explain a decision taken by a model? Why do I need to explain, and how do I need to explain? So what do I need to explain? Of course, going back to our earlier discussion, and all of us, most of us spoke on that, we need data to take the right decision. And decision is only as good as the data involved. So certainly, it's not just the data that's so easily available to us that should be used for your modeling. You will not be in a position to explain the model's outcome if you would have gone with just a subset of the data. We call it as biased data. Say in the example of fraudulent transactions and all, you have millions of transactions as data which is available, but not necessarily millions of records for fraudulent, at least known frauds. So that we call as a highly unbalanced data set or biased data. That needs to be corrected, and there are techniques to do that. But then if we try to reinvent and do all of those our own, it's going to be a long day. So get all the right data, get the engineering platform right. Whatever we do, you try to explain it, you try to predict, you try to cross-sell, you try to prevent. It's only as good as what this platform is going to give you, what you are building on top of the platform. So that holistic ingestion, assimilation of data from every possible places. So that's what we need to do this explain. Now, why explainability? Certainly, gone are the days where someone denies a loan and then you try to run after the bank manager, hey, give me a loan, you see him the way you want to see. But today, the bank manager is also helpless. It says that, hey, the computer denied loan. The system said no loan to you. That's it. Now, who is the system? That's all of us involved in technology and the decision making and the business heads. Right? We gave data to build a system who gave the decision to deny a loan or something else to that citizen. You need to explain that. There comes the regulations or your social responsibility and all of that. You cannot be a black box. You literally cannot outsource it so much that even you don't have a clue why one of your consumer was denied something. That's a reason why you need to explain. Now, how can you explain that? Yes, this decision was taken by a model that was built with your own data, the data that you gave, and all you need is visibility into that data to explain. And in technical terms, there are two aspects when we talk explainability, global and local explainability. Let me not get into that, but the good news is, again, most of these platforms, they have this capability inbuilt. They tell you, they not just tell you, deny loan to customer ABC. They also tell you, I'm telling you deny loan basis these 6 reasons. These patterns that I have seen in our own data. You take a call. Human in the loop. AI and ML, not to replace that decision making. AI and ML to augment that decision making. And players like Oracle, all of these are inbuilt in the platform. They have been doing data for like 45 years and they have done. Open source platforms are there. Many other players are there. So that's the good news. It's all there. Pick the right platform. Choose that and whoever you can trust your data with. So that's how you go about explainability.
Okay, cool. Thank you. Lovely to hear your thoughts, Manoj. So we are about the end of the presentation. So as we wrap up, we thank all of you. I think I personally loved hearing you. We heard about how data is all around us, the importance of collecting the data, building the stack, how use cases are solving social and economic problems, at the same time with the word of caution that they used to be used wisely and control systems cannot be diluted. Lovely hearing your thoughts again. Thank you, and thank you, organizers.